President Trump announced that April 2nd, the day tariffs are implemented, or as he called it. So, do you see what's happening here? The S&P 500 sold off and fell below the 200-day moving average. It didn't just fall below, it fell below and bounced back up, and got that confirmation rejection to the downside. While the BTC Pride bounces off 81k and the markets are burning, the big fishes are accumulating. However, we should not be short-sighted. Liberation Day or April Fool? Hello crypto sensors and welcome back to the channel. So, President Trump announced that April 2nd, the day tariffs are implemented, or as he called it, Liberation Day, the day America gets back at all the countries ripping us off, end quote. But, as we saw it, investors weren't excited about the news. They were pessimistic, bracing for the possibility of even more tariff announcements, and that could seriously impact Bitcoin's price throughout the month. So, the markets are in chaos, with panic selling spreading quickly across every industry. The S&P has wiped out $1 trillion in market cap from the stock markets. As you can see, the tech market is being hit especially hard, with AI companies and cloud titans like Google, Meta, and Amazon taking a major hit. And the losses exceed $120 billion for the crypto market capitalization losses as sell-off accelerates. So, is it liberation or a bad April Fool coming for us? Let's find out. Let's get geared on the S&P 500 index. Do you see this blue line? This is the 200-day moving average. This may sound like gibberish if you've never learned technical analysis. But if you recall our video from last Friday, here's a quick reminder. The DMA is the average price of a security, like a stock or a crypto, over a specific period. The 200-day length helps determine whether the market is an uptrend, acting as a key benchmark for long-term trends. So, do you see what's happening here? The S&P 500 sold off and fell below the 200-day moving average. It didn't just fall below, it fell below and bounced back up, and got that confirmation rejection to the downside. And this means a momentum shift. This is a confirmed new downtrend in the stock market, and all trading algorithm and technical traders are now treating it as a downtrend. So, the market is changing direction, and traders might look to exit positions or adjust their strategies to adapt. It might sound dramatic, but this shift suggests that America is heading for a recession and a bear market this year, due to Trump's economic policies. And what does the Fear and Greed Index tell us? Extreme fear. It means that investors are worried and uncertain about the market. It usually happens when prices are dropping fast and people are panic selling their assets. Again, remember, giving it to panic selling isn't smart either. Extreme fear can also be a sign that the market is close to the bottom, sometimes even a buying opportunity for those willing to take the risk. So, how low could Bitcoin go if traditional markets take another beating? Right now, we are on TradingView, the Bitcoin chart. Let's hop on over to the S&P 500, and we can see we still have the same indicators, the 200-day moving average in yellow, and the 50-day moving average in blue-green. If moving averages are trending up, that shows the trend of bullish momentum, a bull market. If moving averages are trending down, that shows the inverse, a bear market. And as they say, the trend is your friend, meaning once momentum is headed in a certain direction, the trend tends to stay in that direction until we get a clear breakdown, or a clear breakout. Now, let's get a closer up. And first thing you're going to notice, just like on the other charts, the break below the DMA line, the retest, and then the rejection. Many times in the S&P's history, we've got the breakdown, but it was just more of a fake out because we immediately bounced back up and the bull market continued. You can see it in purple. That's why the confirmation is so important. The last time we got a clear rejection of the 200 DMI to the downside with the S&P, and the last time we saw this was in mid-2022, meaning we broke below, we bounced back up, clear rejection, and that started the momentum to the downside. How long did the bearish market last? Well, it lasted the rest of the year from April of 2022 to January of 2023, 8 months. Let us look at one more example. In the red frame, that's the COVID crash of 2020. This one was sort of a forced market crash because it was a global shutdown. And when you look at the index, we got the breakdown. And then, when we retested again, we broke back above the DMA. But this wasn't even a bear market, just a quick little over 20% correction. And we have just seen the confirmation of the rejection again. These crypto waters are anything but calm, that's for sure. But let us see what the whales are up to. Surprise, surprise! While the BTC Pride bounces off 81k and the markets are burning, the big fishes are accumulating. Not so surprising after all. Let's take a closer look with TradingView. For context, large Bitcoin holders are called whales when they accumulate between 1000 Bitcoins and 10,000. In black, that's the BTC price, and in orange, the addresses or wallets that hold a large amount of Bitcoin. So, addresses in this category have remained steady since the beginning of 2025, from 1,956 addresses on January the 1st to over 1,990 addresses on March 27, still below the previous cycle's peak of 2,370 addresses recorded in February 2024. Maybe you can't see it clearly on the graph, but it gives you the idea. The point is, these entities are resilient to market volatility and show accumulation behavior, mirroring patterns of previous bull cycle. I was thinking about the 2020 bull cycle, the last bull market before the 2022 crypto winter. But in our current bull market, in green on the right, the distinct pattern emerged no less than 3 times in orange. It showed Bitcoin whales' rapid BTC accumulation, even as retail investors sold en masse. So, we have a hint that large investors might be preparing for a potential future price rally. That's called strategic accumulation. Let us compare with past cycles. During the 2020 bull run, whale addresses surged from 1,800 to 2,200 between March 2020 and April 2021. Bitcoin's price rose from $3,800 to $64,000 during this period. Today's pattern mirrors this behavior, suggesting whales are positioning for a late 2025, early 2026 bull run. However, the current count, 1,990, is still 16% below the 2024 peak at 2,370, which implies accumulation is still in early stages. Whale activity often precedes major rallies by 6 to 12 months. This aligns with predictions of a late 2025 cycle peak. In the short term, Bitcoin may be facing resistance at key levels like 85,000 or 90k, leading to a temporary pullback. However, we should not be short-sighted. To make it simple, my point is that price of Bitcoin will rise during the late 2025 and even rise to its previous all-time high of $120,000. And that's all for today's video. I think you're starting to see the pattern. Markets crash following announcements, triggering sell-offs, while a handful of big players use this opportunity to accumulate and prepare for the next cycle. Liberation Day might turn out to be April Fool's Day for many, if we focus only on short-term thinking instead of looking at the bigger picture. Please drop a comment, a like or subscribe if you enjoyed today's video or if it was useful to you. And always remember, stay sharp, stay curious, and I will see you in the next one.